What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be taking a look at Ally Financial, and this is not a company that I own. However, it is one that Warren Buffett owns, and I own a very similar stock to Ally, and that is SoFi. I have quite a few videos going over SoFi on this channel, so go ahead and check them out. But in this video, what we are going to do is we are going to take a look at Ally's financials. We're going to take a look at their revenue, their EPS numbers, their shares outstanding. I also want to go over their valuation and how it compares to other banks in the industry. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Ally's stock chart. We can see here today, the stock moved down over 2.5%. Over the last 5 days, down almost 4%. Last month, up around 1.7%. 6 months, we can see that this stock is up almost 10%. Year to date, up 13%. However, over the last year, it is down 12.5%. And over the last 5 years, this company has traded basically sideways. We can see that the stock has moved up 0.25%, and from its all-time highs of around $55, we can see that the stock is down over 50%. Here we can see Ally's last 4 quarters of earnings reports, and they are actually scheduled to report their third quarter earnings on October 18th. But for their Q2 earnings, they reported an EPS number of 96 cents, and revenue came in at $2.08 billion. EPS for the first quarter came in at 82 cents, and revenue came in at $2.1 billion. And for the fourth quarter of last year, we could see that they actually reported EPS of $1.08, and revenue came in at $2.2 billion. And then the third quarter of last year, there was a huge surprise where they reported $1.12, while analysts were expecting $1.73, and revenue came in at $2.02 billion. So on Google, we were actually looking at non-GAAP EPS numbers. Here on Macro Trends, they have represented the GAAP EPS numbers. However, that is relatively unimportant. The important thing to take away from this is how their EPS numbers have changed over time. And the big thing is the drop off that we see in the third quarter of 2022. And that has to do with the increasing of interest rates. Ally Financial focuses on offering loans and having people refinance to their platform. And oftentimes what happens as interest rates rise is less people are refinancing, because if they were to do so, they would be refinancing to a higher interest rate, which would drive their bill up. So what Ally has gone through over the last year or so is a loss in customer base due to the fact that interest rates have been significantly higher. And this is something similar that we've seen across a number of banks, especially smaller banks like an Ally or a SoFi. And with that large drop off, we have seen them return to EPS numbers that are similar to what they were seeing back in 2019. And we can see that their price has followed a similar trend to their EPS numbers. It has fallen back into ranges that we saw in 2019. So they are currently sitting around $27.99. And at the end of 2019, they were sitting around $30. However, at the start of 2019, they were similar to the price that we're seeing now of around $27. One important thing to note is their dividend. And back in 2019, they were offering a 17-cent dividend. However, since then, this dividend has almost doubled all the way up to 30 cents. In terms of Ally's revenue numbers, we can see that they have had some slow growth periods and some fast growth periods. In 2019 to 2020, they grew by around 3.5%. However, from 2020 to 2021, their growth went all the way up to around 15%. And then 2021 to 2022, they saw that drop back down into that kind of 5% range. And now we're seeing their revenue growth actually fall slightly. And that is to be expected because they had a lot of growth pulled forward due to lowering of interest rates. And now with interest rates being very, very high, they are seeing a lot less customers refinance their loans. Even with the revenue slowing down, they are still outperforming 2019 and 2020 numbers. They are bringing in around $2 to $2.1 billion in revenue per quarter, which puts them on track for around $8 to $8.4 billion for the fiscal year. Ally has also done a very good job of lowering their shares outstanding. We could see that 5 years ago, they were sitting around 0.45 billion shares outstanding. That has dropped all the way down to around 0.3 billion shares outstanding. In terms of valuation, Ally sits at a very low value. However, don't let this fool you because a lot of banks sit at very low PE ratios. We can see that currently Ally Financial is trading at a 6.05 forward PE ratio, and over the last year, it's traded anywhere from 7.5 all the way down to 3.79. When we compare that to something like Bank of America, we could see that they are currently trading at an 8.55 forward PE ratio, and they have been relatively stable over the last year, trading anywhere from an 8 all the way up to a 9 forward PE ratio. Jumping back to Ally's PE ratio, it is a very good example of why you need to understand the metrics behind a business and not just use one metric to value a company and whether you buy into it. Because if you were to look at Ally Financial's PE ratio a year ago and see a 3.79 and compare that to something like Bank of America that was sitting around an 8 to a 9, then you would think that Ally was trading at a very deep discount. But what you need to understand is that Ally was in a position where they were benefiting from very low interest rates, and that was a temporary thing. Everyone knew that interest rates were going to have to go back up, and that was going to have an effect on Ally's business. And what that means is that they were fine with Ally trading at a very low PE ratio because they knew that this was a short-term gain in a lot of their financial numbers, like their EPS numbers and their revenue numbers. However, what we've seen over the last year is that Ally's EPS numbers have dropped, and as that has happened, the stock price has also fallen. However, the EPS numbers have fallen in a more significant way than the stock price, and that has resulted in the valuation that we're seeing now of around a 6. So we could start to see EPS numbers level out and potentially slightly increase, and what that could mean is that Ally's stock price could increase slightly as we see the valuation become more in line with larger banks like a Bank of America. If we look at analyst expectations for EPS over the next couple of years, we can see that the current year analysts are expecting an average EPS number of around $3.24, a low number of around $2.94, and a high estimate of $3.40. For next year, the average estimate comes in at $4.34, the low estimate comes in at $3.33, and the high estimate comes in at $5. In my opinion, the biggest catalyst for Ally moving forward is going to be interest rates. Over the next year or so, if we see the Fed start to drop interest rates, that is going to have a big impact on Ally's business, and overall we could start seeing them grow their revenue and EPS numbers. However, Ally is a very stable business, and we can see that from their dividend. They have done a very good job of increasing their dividend over the last few years, all the way from 8 cents to where it is sitting at now of 30 cents. And the only way they have been able to do that is being very stable and having a strong, solid customer base. Even through the pandemic and everything, they have been able to continue to increase their dividends, and that is why Warren Buffett has invested in this company. In my opinion, I would be interested in Ally if it dropped to a lower price. Right now, I think it's sitting in a fair valuation range, but I would want to pick it up at a discount, and you're still getting a very strong dividend yield right now of around 4%. But if it were to drop even lower, you could potentially pick up Ally at a 5 or 5.5% dividend, which would be absolutely insane for a stock, especially, like I said, as stable as Ally. But with all of that said, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.